What's up, people? Welcome back to Invest with T-Claus. My name is Tevi, and this channel is dedicated to my investment journey, along with coverage on Tesla, NEO, Virgin Galactic, and ChargePoint. Come for the information, stay for the random clips. Now, I say that, but we all know that crypto occasionally finds its way into my content, and today is one of those days. So in today's video, we'll start by grounding ourselves on the macro market environment, then get into noteworthy news on crypto with Bitcoin-specific announcements, followed by news on NEO. We'll then hear from five-star analyst Colin Rusch, weighing in on Tesla after reiterating his buy rating with a $1,000 price target, and wrap up with a portfolio performance expressed in percentage gain or loss for the week. We have a decent amount to cover today, but if there's enough time, I'll sneak in the latest rumor on Virgin Galactic. Drop me a like, get comfortable, and let's get into it. All right, so let's start off with context is everything. The big concern this week was the Consumer Price Index, or CPI, which is a proxy for evaluating inflation, and this is a year-over-year comparison. And it came in at 5%, which is a level that we haven't seen since 2008, which made big headlines, right? So this really means that growth stocks, generally speaking, should have sold off like they did last month, right? Nope. And the reason why the market didn't freak out is because, again, this was widely expected. And the reason why this was widely expected is because the main driver for the increase are directly tied to supply chain issues, which is what I've been saying for several weeks now. And this is exactly what the Fed has been saying. So to give you a few examples of line items in the CPI, we have higher used car and truck prices. That goes right back to chip shortages. Higher airfare prices. That's, again, most people last year this time weren't flying, and now we are again. So higher demand for airfare. Dining out, same issue here. Last year, we weren't dining out as much. Now we can. Oil and gas prices is the other one that was on here. And that's, again, besides the fact that everybody is getting back on the road and driving, it's all about ESG concerns now. So we're going greener, which means that the administration, again, if you remember, is shifting subsidies to support greener alternative versus new pipelines and drilling more. So basically, at the end of the day, all the things we weren't doing or buying in a meaningful way last year, from a goods or services perspective, we as consumers are now able to do so again. So that pent-up demand is putting tremendous pressure on businesses and their supply chain. So once supply catches up to demand, this all normalizes and poof, problem solved, which is basically what the Fed, again, has been saying all along, transitory inflation. The bottom line here is that now it's way too obvious to try to run any kind of scare tactic narratives where inflation is going out of control in any kind of meaningful way. So the market gets it, and that's the same reason why the 10-year note rate is at the lowest it's been in months. Remember what I said about money managers running these 3 to 6 month rotation so they can, at a minimum, match the indices performance and make money for their clients? Well, the growth sector fell out of favor in mid-February, right? And that was because they had to reposition for the opening trade. And now just 4 months later, 4 or 5 months later, this is what we're hearing.
I was just thinking about this idea that the S&P can get to 4,400 by mid-year. That's a big lift. It's 200 points. And as I was going through the sectors, I realized that a huge chunk of this contribution has to come from technology. So we took a deep dive and we looked at what's really changed. And we realized that the market had already panicked about interest rates. So as interest rates are cooling, there's actually a pretty big flip that takes place. And then there's a demand thing. We think now that consumers have so much cash on their balance sheets, they don't have to financially restructure, which is financial services demand. But as infrastructure spending comes underway, that benefits tech and FANG. So we think there's still a really good secular growth story. And now the interest rate headwind's gone.
And just like that, tech and growth are back in favor. Funny how that works, right? Now, there are a couple of headwinds that we need to be aware of that are coming our way next week. The first one is going to be around the PPI number, or Producer Price Index. And very similar to the CPI, it's likely going to come in hot. The second one is going to be around the Fed meeting that will take place on either Wednesday or Thursday next week. I can't quite remember. Now, even though the majority of the market agrees that inflation is transitory, the next big debate and narrative will center around when will the Fed start tapering. And that matters, again, because it will have a direct impact on the 10-year Treasury note rates. And that, in my opinion, again, not a financial advisor, but in my opinion, that is going to be the single most important measure from a macro environment perspective. Now, I like to keep things simple. And so if over the coming weeks or months, the 10-year note rate starts to rise quickly towards 2%, growth, very similar to before, will likely take a major hit. Now, if rates stay at 1.6% or drop below, Growth will rally and start to push higher. Very similar to where we are right now, it will continue to rise. Essentially, at the end of the day, it simply means for me that it's the difference between buying at a discount or holding my positions. And that right there is the beauty of investing with a 5-year time horizon versus gambling as a day trader and trying to time the market. So now that we know where the broad market stands, let's dive into more specific news around crypto and some of the channel favorites. So last weekend, the Bitcoin conference was held, and probably the most significant news coming out of the event was this. Hey Siri, what is the currency of El Salvador?
I found two, Bitcoin and United States dollar.
That's right. El Salvador is now the very first country in the world to accept Bitcoin as legal tender. And that was after amending their legislation just a few days ago. Now, over the next 3 months, the infrastructure will be created to allow the roughly 6.5 million people of El Salvador to use Bitcoin to pay for anything ranging from groceries to taxes and everything else in between. And not just that, right? This will be the first sovereign country to hold Bitcoin on their treasury. This is major, right? More countries have now been reported to be considering making the same move. Remember, Bitcoin has a fixed supply, which means that as the adoption demand soars, so will the price of Bitcoin. Now, following this news, the international banking regulators have now formally recognized Bitcoin as an asset class, which makes sense, right? It's currency. Now, the significance here is that it now gives the green light for every banking institution worldwide to offer services in support of Bitcoin. The narrative around ESG concerns will likely be addressed over the next few months. So when you put it all together, Bitcoin hitting $100,000 or higher this year doesn't seem so far-fetched anymore, right? Last but not least, the Bitcoin network is actually being upgraded, and that's through the Tapwood upgrade. And it is now about 90% ready. And actually, I think at the time of the recording, it's now 100% ready. And the intent here is to improve the privacy and fungibility of Bitcoin, along with lowering transaction fees and incorporate efficiencies improvements. So the upgrade is going live in November this year. And whether you like it or not, Bitcoin's success and broad-based adoption impacts the entire crypto world, right? So as more positive news comes out, and this plays out as anticipated, Bitcoin will surge and other cryptos will follow along with it. And the last couple of things I want to bring to your attention when it comes to crypto and the broad-based adoption is this. Now through Coinbase, you'll be able to add crypto to your 401k. And through the Coinbase Visa card, now anywhere Visa is accepted, Apple Pay or Google Pay is accepted, you can use your crypto to make purchases. So you can go to the grocery store and buy milk or whatever else that floats your boat with crypto. That's massive news. All right, so from crypto to EV, we haven't covered NEO in a bit, but if you own the stock, you know that it's been on the move, right? And part of that is due to the friendlier macro environment that we're in. It gained almost 10% this week alone and is up just over 35% from a month ago, making a very strong comeback. So big news that hit this week and helped move the stock is that NEO has been granted the EWVTA license for the ESA model, and that stands for European Whole Vehicle Type. This basically allows NEO to mass produce, sell, and register the ES8 in all European countries, right? That's big. I mean, they are launching in Norway in the fall, but with this new license, they can essentially expand anywhere in Europe, giving them full flexibility on the next phase of their EU strategy, right? So that's massive. Lastly, NEO announced that the ET7 will be the second vehicle to launch in Europe next year, and they will have a yearly capacity of around 50,000 vehicles. So to put things into perspective, at a starting price of $70,000, that's an expected additional $3.5 billion of revenue next year.
John Cena is ready. John Cena believes in himself.
And that potential right there is precisely why Deutsche Bank analyst Edison Yu reiterated his buy rating with a $60 price target. Make no mistake, NEO is going to the moon. So with that, let's switch over to Tesla. So the Tesla stock hasn't done too much as of late, but did manage to rise by just over 3% this week. And the biggest reason for this was the Model S Plaid delivery event. To sum it up, the Model S Plaid is now the fastest accelerating production car available on Earth, right? So that's faster than any Ferrari, any McLaren, or Bugatti that cost probably 10 to 20 times more. Actually, not probably, actually does cost 10 to 20 times more. The reality is the Model S Plaid is far ahead enough from a technology and performance standpoint compared to the competition that the Plaid Plus that Elon canceled last week was not needed. In my opinion, that was the right call. It does allow for more product performance differentiation when the Roadster eventually is released next year. But with that said, let's hear from 5-star analyst Colin Rusch, who currently has a price target of $1,000 on the stock. His thoughts on the Model S Plaid and his outlook on Tesla's future.
Besides the blazing speed, does this car live up to the hype?
Yeah, I mean, I think it does. They're trying to do a couple of things with this. One, update the Model S, but also really innovate on the technology side. And we saw a couple of things with the RPMs on the motor, running at blazing speed, and the lightweighting that happened in that. And so, in terms of an evolution of the technology, that's been an important element. At the product level, seeing a little bit more comfort in the vehicle and taking a kind of an incremental step towards a fully autonomous vehicle and how that might look in terms of the steering wheel as well as the back seats and having a little bit more space to lounge while you're riding make a lot of sense to us. That they're doing that with their high-end vehicles before they start rolling those sorts of design elements into the lower-end vehicles. But I think for us, this was a major step forward. With the 0 to the 60 under 2 seconds is an impressive feat in a production vehicle, and I think it more than meets the needs of the company in terms of evolving the product portfolio.
Colin, you said that this is a major step forward for the company. Any concern at all that they canceled the Plaid Plus, or can you give us any insight as to why you think that decision was made?
I mean, honestly, I don't know why we need to go faster than 0 to 60 in 2 seconds or go 200 miles an hour. I'm not sure what else they offer consumers at this point.
I will have to slightly disagree with Colin here. And it's not about the fact that I need to go that fast. It's a simple fact that you can, right? And that makes it cool. But there's a lot more than just the insane speed in the Model S Plaid. For example, it is also the first production car with an infotainment system that is on par with the PlayStation 5. So essentially, you're getting hypercar performance with the comfort of a nice luxury family sedan. You just can't beat that.
For us, it's really not a concern at all.
You have a price target of $1,000, $80 on the stock, about $400 from where we are. What's going to get us there?
Our thesis from here is really about Tesla delivering on the autonomous opportunity. They've got, by the end of the quarter, they'll have nearly 1.5 million vehicles on the road, collecting data, informing their AI and improving the system. We think that's a critical advantage versus all their peers that are working with still thousands of vehicles and single-digit thousands of vehicles. So we think the learning cycles are dramatically faster, and our expectation is that they're going to be rolling out incremental functionality around urban driving, left-hand turns, things like that, in a larger and larger set of geographies. And that's what we think ultimately drives evaluation here over the next 12 to 24 months is the delivery on that autonomous technology and really being first to market with a fully autonomous vehicle.
The only item worth adding here is that we're now only a couple of weeks away from FSD being widely available to the public, and this will allow for more people and agencies alike to experience the latest version of the software, and that should be an eye-opener on how far ahead Tesla actually is. I am super pumped. I can't wait to be able to download it, try it out, and see it for myself.
And when you look at Tesla's competition, especially from the legacy automakers, GM had a big push for EV earlier in the year. Ford had one within the last month, and Volkswagen. Is this a threat for Tesla? Because they are better capitalized and they have bigger factories and more resources right now.
Well, I mean, Tesla's awfully well capitalized right now. North of $10 billion in cash on hand. They're growing their factory base, so we're not worried about their capitalization. It actually is quite difficult to make EVs. We saw that with Tesla's teething pains early on in its development. And we've seen it with folks like VW in specific with their operating system over the last couple of years. So we're expecting that the larger OEMs that are established are going to figure this out and will make vehicles. They still, I think, are disadvantaged from a performance perspective versus Tesla, as well as from a brand perspective, given the evolution of the technology. And again, that's why we think this Plaid was important for Tesla to get out into the public realm, because they are demonstrating a clear technology lead versus their peers, whether it's the established OEMs or some of the startups.
And that right there is a perfect example of the bias towards Tesla that exists in the mainstream media, trying to plant the idea that Tesla isn't well capitalized somehow. The reality is that Tesla has a lot more cash on hand and a lower amount of debt than any of its competitors. The difference is that unlike the likes of GM and Ford, Tesla doesn't pay for advertisement on major networks, which leads to this type of bias treatment, even though they are clearly leading the industry by a mile. All right, so kudos to Colin for correcting the host here and stating the facts. Let's quick switch over to the rumor I mentioned earlier in the video about Virgin Galactic, and I shared this on my Twitter account earlier in the week, but according to the report, Virgin Galactic is pushing for a second rocket-powered test flight for the 4th of July weekend. Now the scoop here, and if this is true, is that Richard Branson will actually be on board. Now this comes after the announcement that Jeff Bezos would be going to space on July 20th. And again, this is just a rumor, but if this is true and Branson is really moving up his flight to the 4th of July weekend, this could be resulting in a commercial license being received even sooner. And if that happens, expect the stock to skyrocket. Now, again, pure speculation, just a rumor. We'll just have to wait and see how it plays out. So the last item to mention here before we wrap it up is the portfolio performance. And currently it's sitting at a loss of 0.31% for the week. Despite all the good news on Bitcoin, crypto assets are still mostly range bound and with some even trading lower. So not too surprised that we're basically stayed status quo here. So with that, we'll leave it here for this week. Hope you found the content insightful. And if you haven't already, hit that like button, share with the others who may benefit from it. It really does help the channel grow. For my newcomers, remember to hit the subscribe button and ring the notification bell so that you don't miss out on any future content. Quick reminder that I post every Sunday and occasionally during the week. But as always, thank you for watching. Stay humble, hustle hard, and I'll see you in the next one.